Seasonal trends, what to expect in June for stocks, gold, and the dollar. The concept of sell in May and go away is a well-known adage in the stock market. However, this year, the traditional trend did not hold true as stocks outperformed and rallied in May. As we move into June, it is essential to understand the historical trends and potential outcomes for stocks, gold prices, and the US dollar. While not everyone follows seasonality, it is worth considering these patterns as they may provide insights into market behavior. Stock market performance in June. Historical data suggests that June tends to be a weaker month for stocks. On average, the month does not yield positive returns. Although stocks performed well in May, the second half of the month witnessed a sell-off. This indicates that June might see underperformance in the stock market. However, it is important to note that individual stock performance can vary significantly, and market trends should not be the sole basis for investment decisions. Gold price trends in June. Surprisingly, gold prices also tend to struggle in June. Despite the weakening of the US dollar, which usually supports gold prices, historical data shows a decline in gold prices during this month. The relationship between gold prices and the US dollar is complex, and other factors such as economic data and investor sentiment can influence gold's performance. Therefore, it is crucial to consider multiple factors when analyzing gold price trends. US dollar performance in June. In contrast to gold, the US dollar tends to weaken in June. This weakening can be attributed to a potential trend of softer US economic data. As the dollar weakens, other currencies, such as the euro, tend to perform better. This relationship is not surprising, as a weaker dollar makes other currencies relatively stronger. However, it is important to note that currency exchange rates are influenced by various factors, including economic indicators, geopolitical events, and central bank policies. Conclusion. While seasonality can provide insights into market behavior, it is essential to approach these trends with caution. The concept of sell in May and go away did not hold true this year, and individual stock performance can deviate significantly from historical patterns. Similarly, gold prices and the US dollar's performance are influenced by multiple factors, and seasonality alone may not accurately predict their movements. Therefore, it is crucial to conduct thorough research and consider various factors before making investment decisions.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.